This is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. All right, how's everybody doing? Looks like we're on our final stretch to Christmas. Markets are probably going to be less volume, which means it could be more volatile, and who knows what might happen, but we'll go ahead and look and see what's going on. Some pretty good analysis today. First of all, I just wanted to remind you that I'm giving away $100 to 10 people in 3 days. All you have to do is be subscribed for free on cryptoinfluencers.com. It's this free channel right here. This one right there. So with that, let's take a look at Bitcoin. So Bitcoin last Monday, we looked and we had this kind of doji reversal candle, and it was really odd to see right after a very weak move to the upside. It looked like it was not going to play out, which I was happy to be wrong. We started moving up pretty significantly, only to reject off of these, the resistance level up here. And we rejected really hard. So that was not great. Rejected hard enough that we ended up with a red candle after all was said and done, with a really ugly wick at the top. So this is going to put some downward pressure on Bitcoin for the next little while. How long, I'm not sure, but we're in for something. What is for sure is if we get a weekly close below 26 or 16,250, which is not too far away from where we are. That's $300 away. If we get a close at or below this, there is probably a continuation happening. And if our current channel plays out, and I guess I don't know if this really is a channel, the top side is definitely intact. But, you know, the more I think about it, the more I wonder if we're probably more here. In fact, this is probably it. Yeah. So this might be more of a falling wedge than anything. I think I've drawn this better on a different time frame or something. But yeah, this is kind of where we're at. The bottom of this is looking like 15,400. If we hit it next week, it'd be 15,300, 250, somewhere in there. So you kind of look at this and you think, is all lost? Are we just dying out here? Well, kind of a couple of ways to think about this is that the market has gone down really steeply. Now we're in a phase where we're going down less steeply. And it appears in the longer term, we're actually, the downward momentum is decreasing, not increasing. So that's kind of where I've been kind of having a hard time thinking that we're just going to blow through the bottom of this channel and just fall apart really hard. I think if we do anything, it'll take some time. But you know, just depends on how, you know, what this does to your portfolio if we move to these levels. So a thing to be looking at during a time like this is let's look at the RSI and see what is happening here. So you can put levels on an RSI just the same way you can put lines on anything else, but our RSI has been falling pretty significantly. In fact, this is probably our this gives us three touch points on this line. if we cross this line, there's a chance that we're probably done with this bear market, because the top of the RSI coincides with pretty much the hottest part of the bull market, and this was getting close to now 2 years ago. So 2 years ago, we had this peak on the RSI, and we've been declining ever since. If we can cross this line on the weekly, we're probably through it. And another little hint that things are getting better. So if we take the very worst bottom point in the RSI and we pull it up to the bottom of here, we're getting squeezed. And if we were to fall through the bottom of this, it would be a pretty intense move, because how the RSI works is you have to have a consistent down. You have to have a lot of red in a row in order to really push to new lows. When things are trending down, but there's a mix of green and red, that's where you actually sneak back up towards the 50. The 50 is kind of the balancing point on the RSI. So what's happening here is we can see just from the chart that we have lost downward momentum, and we're leveling off. And in fact, even though we're putting in lower lows, the RSI is putting in higher lows. This is called bullish divergence, which means this won't last forever. This is a decrease. It's a change in momentum. And the final thing that we're doing is we have a flip from, let's see, I'd put the support here. I'll go down a little bit further. I'll put a line right here because it kind of touches support here. It's slightly higher, but still, it's in the vicinity. And then we kind of had kind of a fake out, but support here, and then fell through. Our most recent lines are starting to find resistance there, and this has become an interesting kind of trade-off band between about a 40 or so. So this high here, I'll zoom in even further. This high here versus this high here means that we had an attempt to move up, and now we're just in a lower range. Even moving sideways will pull this back up, and it will approach 50 if we just go sideways forever. So any little hint of a move to the upside will change the balance. And honestly, this crosses January 16th. So in 3 weeks, we'll break out one side or the other. And to break out the bottom, we would have to increase momentum, which means this line and this line would have to break. We'd have to break through the bottom of this. And it would have to be pretty abrupt. I guess I'm just in the camp where, sure, things are ugly, but I just don't see a major event that'll knock us out, unless something insane happens, like, Tether suddenly stops circulating, or Binance goes down, or just something unforeseeable from our vantage point now. But I still see a lot of positive things in the market. That kind of leads me to a discussion from our pattern matcher. So our pattern matcher found this scenario as our most like event. So we had a move, we had a sudden move down, we kind of had a consolidation. We could have easily had a move up, and we did see that on the beginning part, but we obviously didn't play out at all. We've gone down, and we've had a very ugly candle. So I'm going to refresh this, and we're just going to kind of see. So our variance here, we had 2 points that were about a variance of 13 or 14%. This was our closest one, but they were really close. This was probably a little bit more likely. This was probably more of a likely outcome from last week, from that we would have probably done this week. Obviously it didn't, and this isn't a perfect match. But let's refresh and we'll just add our new data point and kind of see what changes. So here's our new week. And it's ugly. I mean, it looks really bad. And what's interesting is we have now 3 data points that are below 13%. So these are actually a tighter match to the prior week. And the closest one looks like this. So this is kind of interesting. So what we have is we have a data point here, and it skips 3. So it's looking at this data point versus this data point. So here and here. But you can see that there's a significantly intense percent drop from here to here in both cases. And then we skip 1 candle and we look at this move to this move. So this here, and there's some variance, and that's why it's 10% variance. And then a little bit of a sideways consolidation. Obviously, the difference being that this one has a bullish tail and this one has a bearish top. So this may not be a perfect match, but it's very interesting that the closest match would have produced a green candle in the next bar. 2015 might be a little bit more reasonable. We had a decent drop percentage-wise. We had a move to the upside, which coincides really well here. We had a doji that should have turned us around, and then we had a resulting red candle. What happened next was we kind of flattened and then lost some ground and then picked up steam. So what happened in this case, and it was very important, was that we needed to find some kind of a support, and it needed to be higher than our most recent bottoms. And that's exactly what I'm asking for. So this could potentially not fall apart if we were to stay away from these lows. It's okay to have a little bit of a red week here or there. In fact, if we were to close near here, it wouldn't be that bad at all. But if we start closing down below these lows, it's going to look like we're going to be looking for another lower support, which will not help us if we're in the bullish camp. Which I'm looking for a bullish outcome just because we've gone down for so much. At some point, we've got to find our bottom. We've got to turn around, and that's what I'm kind of anticipating. And then finally, our next one is simply just a week later. So very similar, but not quite as tight of a response. In this one, it's matching a scenario where we've got the bulk of our downside already in. We have another small candle, and then we're gonna move on. But that's kind of interesting. If I look at these top closest variants, it's surprising to see that the outcomes are averaging green. So the average is that there's a greater than 50% chance that the outcome is positive than it is negative. So, take that with a grain of salt, but it's kind of an interesting thing to see that even with this chart, it's not to say that everything's completely, toast. It kind of depends. I know that the S&P is struggling. So the S&P, I'm expecting this to continue falling. There is a case again, and I mentioned this before, that we find support on the 200, and that would be near this level here. So if in a couple of weeks the S&P stops bleeding off, it might help us a little bit. Bitcoin is down 1.11%. S&P today is down 1.05%. So they're kind of going in tandem. S&P is certainly not helping. Bitcoin's kind of falling down because it should. Like this is a natural response to this type of chart formation. So anyway, there's kind of a weekly rundown. Ethereum we've talked about a couple of times. We had a very ugly flip from this support to this resistance, and now we're falling off exactly the way we should. And the question is will we lose this point? If we lose this point, same story. we're starting to get pretty close to some some places where if we get upside down here, it's going to start looking like a cup and handle or something, and there could be more downside to go. But we're playing in kind of an interesting spot, because if you look at this line here, we're just barely above here. So anyway, we'll see how that goes. If you look at the daily, not much is happening. Just this insane 8-month candle that we're still finding support on. So we'll see how that ends up playing out. I'll move this to just the weekly. Okay, so anyway, so yeah, we'll be watching all of these to see how we do. We just kind of want to stay away from these lows, because if we get too close, we're going to have another fall off. And then finally, Bitcoin on the daily. This candle's got 4.5 hours to go, and we're getting a cross on our 9 and 20. We had a rejection on the 50, so there's quite a few things adding up to be pretty ugly. If we can take all of this bearish news and still stay above some of these lows, then we'd actually be in really good shape. So I'm going to be patient and kind of wait and see how things play out. If we get down into these levels, then I might be leaning a little bit more for some downside. But for now, just kind of holding and waiting and being patient, and we'll see how things play out. I like to make measured decisions. One of my favorite trading statements or quotes is, if you're trading and you're scared, stop trading. If you're too emotional, if you're too excited, you're going to make mistakes, and you're better off letting the dust settle and then make a sound decision where the emotions are in a better place. You can always re-average, you can always fix something later. As long as you've been smart with your risk management and kept your positions small, you can always recover. So anyway, it's kind of where I stand. Looks like an interesting week. I'm very curious to see how we come out. The matchers are saying that we will likely have a green week. From the chart and from just my personal experience in TA, I would expect us to have a red week. So we'll see which of those scenarios plays out. But if we have any sort of a small candle this week, it'd be pretty bullish. So if we end up not falling off very far, that would be amazing. If we had any kind of a green candle, it would be very bullish. If we start getting down here and lengthening out and closing a body below, it's gonna start looking like we have some more downside on the table. So we'll keep looking at it. Thanks for being here, everybody. I appreciate everyone's support. I noticed a few other people joined the pro channel, so that was cool. We're just working through things as we go, but I feel like we'll be positioned really well when the bottom's finally in. There's a lot of upside on the table. All right, we'll talk to y'all later. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.